we proceed to the most adventurous part, where we have to process the additional information. Actually, that's a new transaction. Oh, it's not really new transaction. That's a transaction incurred for the year. So you have to follow the debits and credits rules. All right. So now we have dividend paid for the first, which is main. We have to right away to post to the financial statement under financing activity. Yeah. So that means dividend paid, which mean outflow. So here the outflow. All right. Which is the 18,000 will be outflow for the cash flow statement. If this outflow, we are going to state as a credit. So we are coloring the credit. So here additional information, you have to complete the double entry. If it is credit, you have to debit somewhere. So the debit for the dividend actually should go to retained profit, because dividend reduce your retained profit. Utilize the retained profit. Yeah. So you debit the retained profit 18,000. All right. So that's how we should do with the additional information. We are tracing back the transaction already incurred. So the debit credit must be applied accordingly and correctly. Alright, so next we have tax expense. So tax expense, alright. Okay, tax expense actually should go to the tax payable. Yeah. So the tax expense we have to debit and credit. So first we have to go to the tax payable. We have to credit the tax payable. Okay, so put a taxation amount on the tax payable, because it's increase your tax for the year, which is 28,000. And then once you have a credit, so you are going to have a debit. Yeah, that's a completing or debit entry. So debit entry will be retained profit for the indirect method. The debit entry for the profit will be on the retained profit account, debit 28,000. Done. Alright, so we have completed the debit credit for the additional. So here we have debit and credit for the tax expense. Okay. Alright, so the next one we have freehold land. Yes, surplus. Yeah. So freehold land is a so we have a surplus, is it? Oh, kat sini ya. Freehold land sold for 60,000, 55,000. Okay. So the freehold lands, we are going to get freehold lands. Yeah. Put it the disposal credit. So the freehold land, because it reduce your freehold land. So we are going to create a new account in the name of the disposal freehold land. So put it under debit side. So complete the double entry. Alright. So that's sold for 60,000. So for 60,000 mean you are going to receive cash. So go to the cash flow statement, because it's inflow of the cash. So under investing activity, yeah. So we have sales of freehold lands amounting 60,000 inflow of the cash. If it is inflow in the cash flow, mean we debit actually. Alright. So once you have debit, you have to be credited. So credited goes to the disposal account of freehold land. Alright. So go or put it over there. The double entry will the bank 60,000. Credit your disposal. So complete our double entry. Alright, so next we have a revalue. So there is a revaluations, right? So revaluation, okay, there's a credit and debit showing the completing of the transaction. Alright, so the next one we should have, so that one is credit, yeah. So the debit will be on the. Alright, so we have the ARR. You have the ARR surplus of 44,000 from the ARR. So automatic, we know the double entry will be debit your freehold land 40,000 and credit your ARR. So the next one will be plant machinery costing 19,000. So you go to plant machinery, you have to credit 19,000, debit disposal to complete your double entry. And then the accumulated depreciation also have to be processed, where you have to take out the accumulated depreciation for plant machinery of 14,000. From the question, yeah, plant machinery costing 90,000. Alright, so here you have to take out the plant machinery accumulated depreciation by 14,000 and post to the disposal at the credit side 14,000. So mean you take out or written off the amount, because you dispose, so the accumulated should be in there anymore. And then you sold for 16,000, sold for 16,000, showing that you are going to receive. So you have to debit bank, credit disposal. Yeah, so go to the bank and then put it under sales of plant and machinery. So debit cash flow by 16,000 main inflow. So completing your double entry. So the next one will be features and fitting. 16,000 debit mean inflow of the cash. So you're completing your double entry. Alright. Okay, now we have fixtures and fitting. Okay, features and fitting costing 16,000. Yeah. So will be disposed. So take out from your features and fitting, which you have to credit, put it under disposal. Please create another one, disposal for features and fitting. Debit your disposal of 16,000. Yeah, debit for the fixtures and fitting 6,000. Complete your double entry. And then the carrying amount of 14,000 main. The accumulated actually 2,000. You have to take out the accumulated from the accumulated depreciation to be post to the disposal. So debit your accumulated depreciation for finishing and fitting 2,000. Credit disposal 2,000. Done. Alright, then you have sold for 12,000. Sold for 2,000 main, you are going to receive money. So you have to debit back and credit your disposal for 12,000. So whenever we credit the disposal first, then we debit our cash flow from investing. 12,000 main inflow of the cash, debit. Alright, so 12,000, yeah, debit. Alright, so debit main inflow. And then you have, okay, done. Debit and credit. Okay, you have next will be debentures were redeemed on 1st January 2018. Remember our closing date actually 30th June. So this will be already in the middle of the month. So you have to reduce your redemption, your debenture. So take out your debenture by 80,000, put it under redemption. So credit your redemption by 80,000, debenture reduced by 80,000, debit debenture. So debit debenture, credit your redemption.